Hi everyone and welcome back to today's More Report. Charles Supposes on Tuesday the 19th of January with me, Richard Perry, market analyst at Hantech Markets. Let's look at my final chart today, which is gold. And I've talked about quite a few interesting charts I think today. Gold is probably in terms of the move that we've had in the last day or so, the most dull. Um, whereby we had pretty much a very, very neutral inside day. No, very little movement on the day, about $6. Doji candle, no real direction. You've got momentum indicators basically neutral. Moving averages sort of flattening off on the daily chart. So you're pretty much stuck, I think, between these two key levels. Let me just go back to that. 1077, which is I believe my line in the sand between bull and bear, and a close below that I think turns bearish. 1098, which is the old overhead resistance, which I still think is a level in play. Which has sort of come back in again in the last week or so as a level of resistance. So I think these are two key levels that we need to break, either to the downside on 1077, on the upside on 1098. This is the hourly chart, and you can see here the sort of consolidation that we are seeing. 1093 became a bit of a pivot level, slight peaks above it, but 1098 is my key level, and we're just sort of edging a bit higher here. We've got, again, fairly sort of choppy sideways momentum indicators on the hourly chart as well, nothing too much doing there. 1085 was this reaction node that we saw yesterday. This morning, early this morning. So that comes in as your initial line of support, but again, I'm not really getting too excited until we see a breakout through these two levels, 1077 and 1098. So I wish you good luck in your trading on gold, and I will speak to you later. Thank you. Or tomorrow.